We're here to record a post-CPI but pre-FOMC Fed meeting video. And we saw a tremendous amount of action today. Today was a highly unusual day. We've seen in the past, at least in November, when we get cooler than expected CPI, we experience mega rallies. It's as if the market is on a spring and that spring just fires and launches us up. And it did that, but then it came back down. We've seen over the last couple weeks the market's decision to do away with the Fed, essentially, to ignore them, to fight them. They've been hawkish, very clearly hawkish, going as far to say blatantly and verbatim that the market is underpricing the risk that the Fed was going to be hawkish. Bullard said that, and the 10-year has come down some 40 basis points since that point, roughly about that. For compliance reasons, apparently I got to start worrying about that kind of thing, whatever, about 40 basis points. Anyways, CPI data, was it really that good? I am not convinced that it's that good yet. I'm just not. And I think this is what the Fed's going to talk about tomorrow. There were a couple categories that were down, but these categories were notably oil, used car prices. I mean, come on, give me a break here. Medical expenses, just a touch. And there was like one or two, like airline tickets. With the exception of medical expenses, which maybe there's some pandemic cool down thing there. A lot of this has to do with oil prices. Oil and energy costs, number one. Airline fares, number two. I don't know if oil prices are going to stay down forever. I mean, we just got news from OPEC. They're expecting next year demand growth to be about 400,000 barrels higher than supply growth next year. So you get more demand than supply. I think you know what that means. That means prices go up. In addition, we're getting rid of the Strategic Petroleum Reserve release. So we've been experiencing that the last several months. Now it's going to be gone. So in addition to that demand supply growth, you're going to actually see artificial supply come off the market. So this is the most important part for CPI, right? Oil prices coming down. This is why we've seen it come down. I mean, core inflation, I'm not convinced, is doing the same thing CPI is doing. CPI seems to have peaked when oil prices and gas peaked. It's pretty simple as that. So it's only safe to assume that prices will go up when gas prices go up. But here's the crazy thing. So gas prices have come down tremendously. Tremendously. I used to pay over $4 a gallon premium. Now I'm just barely paying $3. Tremendous. Despite that fall in gas prices, virtually prices for everything else, except those few categories we mentioned, are up. I mean, does the Fed look at that with glee? I don't think so. Food prices up a lot. I mean, wholesale food for PPI was up 0.5. Shelter was up 0.6. You annualize those numbers, you get 6% for wholesale food year on year or annualized year. And for shelter, that's 7.2%. I mean, we're seeing wages go up. That's not an indication that prices are going to come down. That's money in people's pockets. The Fed is talking a whole lot here about trying to suppress demand. If you give people more money, that's stimulative to demand. So bottom line, we're just here between these two events, and I think the market decided today that it was going to start listening to the Fed again. I think that was an interesting sign. So we'll see what happens tomorrow. That's today's video, and until next time, peace out.